Regional Group webinar, Preparing for the Next Decade, a Risk Perspective. So we have four speakers, four panelists with us today. I'd like to take a moment just to introduce them. First would be Mr. Sundar Natarajan, who is a level 4 IRM qualified individual, a CM IRM, and he's also the Chief Compliance and Risk Officer, India First Life. He also sits on our Strategic Advisory Board. Next, we have Mr. Ramit Sethi, IRM level 1 qualified. He's a Director and CCAR of Reporting Finance Group at Morgan Stanley. Thirdly, we have Mr. Vignesh Chandrasekhar, who is a grad IRM, and he's a Senior Manager at Risk Consulting at Aditya Birla Insurance Brokers. And finally, we have Mr. Vishesh Vadva, who is an IRM level 1 qualified. So welcome, the four of you all, of course. And we look forward to listening to all your inputs and all your thoughts in the area of risk management. And well, I hope everyone leaves more risk ready than they came today. So great. So Mr. Vignesh, I'd request you to go first and Mr. Vishesh to follow. Yeah.
Thanks, Anand. It's a pleasure to be here. And first of all, I hope that all the participants, my fellow panelists, the staff at IRM India, all of you are healthy and safe, along with you and your family. And I'd like to thank IRM India for giving us this opportunity to speak with all of you and to share our perspectives on what do we expect the next decade to be with regards to risk management. Now, before I just get into that, I'd just like to talk a little bit about risk and what has been my journey with risk management. Now, as we are all aware, in life, change is the only constant. Okay, without change, nothing moves forward in life. And if we want anything positive to happen in our life, there has to be a change. Now, however, when it comes to change, you will always have some risks associated with any change. These risks may be positive or these may be negative. So we need to ensure that we manage these risks so that we have more positive outcomes than negative outcomes. Now, my career is in the field of insurance, and I was fortunate to be introduced to the world of risk management at the very beginning. And I have found it very interesting. And what I've realized is that for insurance, the risk management is one of the backbones. And my fellow colleagues from the insurance industry would agree that without risk, there is no insurance. So it is important for us to understand about risk and how these risks can be managed. And what I've observed is that having an understanding of risk management has helped me in my career to be able to design appropriate insurance coverages for various organizations. So risk management has played a vital role, and having certifications and qualifications from professional bodies such as the Institute of Risk Management has definitely aided in my career. So this was a little small introduction from my side, and I'd like to hand it over to Vishesh to take it forward. Vishesh?
Am I audible and visible? I'm sorry, I don't think I'm visible. I'm in a car. Apologies. There was a family emergency. But I'm going to try my best to sort of communicate what I wanted to. Today I'm going to talk about why being a risk manager is more than just specializing in a field. So I am a student. I'm currently in my final year of my undergraduate study. And I picked up ERM qualifications because I was really intrigued by the whole paradigm of applicability, right? And oftentimes in the beginning of our careers, we as students are pressurized to specialize, major in finance, specialize in law. A vast majority of firms today are structured in silos, wherein human capital is funneled through specialized channels to achieve a set of rigid objectives. This trend is predominantly observed in India, right? And we observe students picking qualifications and skill sets based on what pays the best and what is more quote unquote lucrative, even before they begin college. But what defines an education's lucrativity? Is it facts or is it values? Is it a pay package or a sustainable interest in the field? Or is it a qualification's popularity versus its applicability? While the features I mentioned formally are pivotal, I believe the latter must take precedence when it comes to setting the foundation of one's career. At least at an undergraduate level, Education must aim to enable students to explore and ask questions rather than narrowing one's scope down to one function. It is imperative for the youth to move beyond becoming job-seeking individuals and aim to become problem solvers and strategic thinkers. This is why I am so excited about the potential of ERM amongst today's youth. ERM does not ask you to pick one line of business before you know much about what you want with your career. Rather, the field of knowledge proves to be a set of values and principles and concepts that you can apply to various paradigms of work. This can range anywhere between financial services, engineering, and sports strategy. A specialist's knowledge of ERM can be applied across areas as your professional interests change and evolve. As human beings, our goals and interests are bound to change and grow, given our contexts. And it is our responsibility to make sure that our skills and values support the ability to achieve those changing goals. And ERM can be a way of achieving this capability. Adding on to the notion of risk's applicability, it is also important to look at risk with perspective. With my little experience, I have sort of understood that people tend to take a negative connotation with risk. One may associate risk management with only managing crises and averting disasters. However, perception can play a big role in setting an operations narrative. Approaching operations with a different set of values and a culture around risk can prove to be transformative. Risk need not be always negative. It may also prove to positively impact decision making. Simple knowledge about risk awareness and managing potential downsides of future decisions can help what positively influence strategy and planning. In short, risk management can not only be used to mitigate, but also to stimulate. Being a generalist is highly underrated during today's times. And while I'm no expert in generalizing or specializing, what I do know is that I'm far excited when I think of my future from a broad perspective with ERM in my skill set. It proves to be an area of knowledge when one can truly broaden the paradigm of applicability. It is a unique concept one can leverage across functions, silos, business lines, and is a quality that no other qualification can deliver. This is why I found IRM's courses rather interesting, as I felt the need to upskill as a student, but I did not wish to limit in any way the possibilities and impact I could create before my career actually began. So thank you guys, that's all I have today. Over to Sundar.
Okay, so very intrigued and very excited to have an audience who's willing to come and listen to a topic called preparing for the next decade. Okay, so I heard some. I mean, it's I've read somewhere. You know, I don't recollect now. They say that in the long term you're all dead, right? In the long term, you know. So who's seen the long term? But it's all about the long term. We all live on faith. We all live on hope, and we all believe that in the long term things will turn out good. So on that note, you know, I'm really excited to be talking about a subject like this and hearing my co-panelists also talking about it. So what we'll do is, while you know, I'll try to share a flavor of what my risk journey has been, and you know, it's been a mix of a design and accident. You know, I undertook risk management education over a couple of decades back, and then after working through multiple functions, you know, I'm now managing risk and compliance and governance at India First Life. What I always believe is it's good to go back to first principles. Okay, let's go back to ab initio first. Vignesh talked about you know, importance of understanding what is risk, and you know, so did Vishesh. So let me ask a question, and you know, I've requested the organizers to do a poll. So let's do a poll. Is risk good or bad? Okay, I'd request the organizers, Ritika, to flash the poll.
Yeah, Ritika,
Is
you
risk
could just put the polls up.
Yeah, is risk good or bad? And you can select a yes, no, or a confused. Right? You could select a yes, no, or a confused. I've been pretty amused to do a poll on these lines. And let's see what it throws up today. And once we see the results of the poll, let's wait for 30 seconds and wait for people to vote on the question of, is risk good or bad, or am I confused? Right? You can say, you can put a yes for good, you can put a no for bad, and you can put confused if you're not sure. I have noticed that this has seen very differentiated results depending upon the audience, right? And it's and I've tried this at this poll at an audience of students, an audience of professionals. I've tried it in my own organization to people not exposed to the risk function, and I've tried it with family. Okay, I mean, the last bit I'll come back to once we see the results of the poll. Can we see the results of the poll?
Yeah, sure, Ritika. Yeah, she shared it here.
Okay. Okay, so it's yes. Okay, which clearly this audience is a discerning audience, and understands a fair bit about risk. And there are naysayers here, and you also have some folks saying confused. Now, the last bit which I was talking to you about, when I do this poll with, especially with family, what comes out tops? No comes out tops. Okay, risk is bad, man. Okay, and what do you associate risk with? You associate risk with the SETA market. You associate risk with races, game of dice. Everything about risk smells bad. So the perception, if perception were to be close to reality, then we won't have all of you coming and attending this webinar, right, on risk. If perception were not to be close to reality, you won't have the Kirana Dukanwala going down and opening his shop in the peak of COVID lockdown. And you won't have a sanitation worker going out and risking his or her life, when the whole world was shut down over a pandemic. You won't have, in the day and age when there were very, very frail, safe ships. You had traders who set sail across the seas without knowing what is there on the other side of the world, with a sense of adventure and enterprise, right? All of this was risk, and yet they did it. You won't have, every day somebody going down, a farmer going to the fields to work, and with the hope that 3 months down the line there will be harvest, and that will feed his or her family for the next season, right? So risk absolutely is good. Okay, risk is what will make one rich. Okay, you remove the SK and add the CH in, and risk becomes rich. So absolutely risk is good, no doubt about it. I always remember this story about a king, and the king's name was Nala. Okay, and Nala, you must have heard from the mythological times, Nala Damayanti fame. This king, he lost his kingdom. Okay, I mean, he was known for other things. He was known for being a very good cook. He was known for tending to horses, but people seldom know the story that he lost his kingdom to a game of dice, and that too with his own brother. But what was more interesting than that is that he went out, learnt the science, over a period of time, and then came back and won the kingdom back over the same game of dice. Okay, so if we are able to overcome risk, manage risk, then it can be awesome. Having said that, let's take a quick another quick poll on who manages risk in an organization. Who do you think manages risk in an organization? Can we have that poll come up, please? Who manages risk in an organization? Is it the chief risk officer? Is it the CEO? Is it all the CXOs? Is it everybody in the organization? Or is it no one in the organization? Who manages risk in an organization? So when I started my career, I didn't know that there was a role called risk in an organization. And, I had this mentor who counseled me into doing courses from IRM. Rest is, as they say, is history. But even afterwards, after I did my course, I would only read in the IRM's journals, which would come every month by courier to me. That's where I would get to know that there are roles called chief risk officer. This is a couple of decades back. So, but life has changed. We have a lot of regulation. For example, today says that the role of a chief risk officer is mandatory. There is a risk management committee which is part of the board, which is necessary, mandatory. All of at least the banking and financial services and insurance segment, BFSI as it's called, you will have a chief risk officer in each of the organizations. Even the Companies Act says that corporate governance is a critical aspect of running business today. Can we have the results of the poll come up while we are talking about this subject? You had oh yeah, interesting. So a decent number of people say chief risk officer. A very small segment says chief executive officer. A lot of people, a good number of people say CXO. Majority say everyone. I mean, that's heartening. Thank you so much. And there is the skeptic who says no one. You know what? I kind of agree to everybody over here. Okay, in their own way. The chief executive officer, the buck stops there, right? The chief executive officer is the owner of the enterprise, or owns the responsibility. Let me put it that way. Owns the responsibility. But in today's day and age, it's not only the chief executive officer. Okay, the organization is run by all CXOs. The chief executive officer is only the captain of the ship. But if not, in the ship, you need to have various aspects of the ship. You need to have a good engineer. You need to have somebody to steer it well. You need to have support staff. You need everybody in a ship to steer it well. So if we say everyone, okay, it may be kind of getting a bit broad-based. But what used to happen about say about a decade back, risk used to be managed extremely well at the board. Okay, and it still is. It used to be managed extremely well at the board, and after that it would get diluted. Okay, there would be the large big risks which would get very well deliberated, talked about, mitigation plans put down in place, analyzed, tolerance limits set, appetite set. All of that would get done, for the very large risks which could make or break the organization. But the others, no. Down the line, it kind of fizzles out, and nobody talks about risk. And then there is a phase when because it became mandatory, then the risk office or the risk management team would spearhead the risk role. But slowly but surely, okay, it is spreading, and we would need risk to be talked about in all parts of the organization. We would need to have all functions apply risk management. Only then, we will, and that is the true essence of ERM. Okay, it's only when a customer services person and in an insurance company, let's say an actuary, an underwriting person, or a legal person, or the human resources person, or a finance person, speaks about and practices, implements risk management, is when we have ERM in place. It needs to seep into the DNA of employees, is when we would have. I would stop on that note and hand it over back to my colleague Anay to take this discussion forward.
Great. So I'd like to pass it on to Ramit for his initial thoughts as well. And then we could move on to the next part. Yeah, Ramit.
Sure. Thanks, Anay. I'm sorry, but there's some technical problem with the webcam. I think my video is not. You guys are not able to see me. But
No worries.
okay. So hi everyone. So I think most of it, the other panelists, they've already covered in terms of what is risk and how it impacts us in our day-to-day lives and in our careers, and how it is important. But what I would want to talk about is my experience. I have been into the financial services and the banking space for 12 years now. And what I would say is risk is not something, it's not a specialized field anymore. It's a prerequisite when you get into your careers. What I understand is majority of you are now beginning your career, or you are into the initial stages of your careers, right? So even if you've joined at a very junior level or at a starting point, uh, risk is gonna be very important from you for you in terms to grow in your career, in terms of doing anything. That's my take on risk management. uh, Whether you get into wealth management, or whether you get into probably operations, or you get into maybe into sales, it's all, there's some bit of risk management that's always is very important. But unfortunately people tend to ignore it because that's how the legacy has been passed on. But in my experience, from all the work that I've done with different people across different departments, I've understood that risk management is important and everybody has to play an important role in it. Second thing I would like to talk about, when you grow in your careers, right? We are very happy that we got growth, and we grow to the next level from a junior staff, from associate to a senior analyst to a manager to a senior director, and we keep growing. But and we're happy, we say okay, we're growing. But one thing is very important to understand here is that with growth you have more responsibilities, and when you have more responsibilities, that means you have to manage risk at all levels. And the more you go on the top, the more risk you have to manage, because that is where the company is paying you. And ultimately, what I would say is that we are here in an ecosystem, and everybody is playing a role. Uh, if you join a company and you start working there, and tomorrow if that company fails because somebody was not able to identify risk, you can't blame the company. You will have to take the blame on you, because at some point of time you are not able to identify that risk. Maybe you are a part of that particular entire ecosystem, so ultimately it falls back onto you. So everybody needs to play an important role there in terms of identifying risk at the grassroots level, and then feeding that information to the managers, and they can pass it on to the top management, and then the risk managers and the senior management can then take strategic decisions and secure our jobs, right? So that's my take on it. And yeah, I would talk more about how where I see risk in the near future in the next part. So yeah, Ane, I would pass it to you. Thank you so much.
Okay, great. Thanks, Ramit. Okay, so before we move on to the next part of today's webinar, we actually received a couple questions from a few of the attendees prior to the event. And considering, the audience is of a much younger age and they're still pursuing their education, like all of you have shed light on, actually, the risk management is of growing importance in today's day and age, is becoming a key aspect in every organization. So my question to the panelists would be this, that do you believe, considering that each of you is quite senior in your own position and you are all I'd say, in the area of risk or have worked in the area of risk before. Should risk management be integrated into education more than it is right now? You know, at maybe at a graduate level, or given more importance in education now than it is?
I can take a shot at that. In one word, absolutely yes. Absolutely yes. And if you ask me at what stage, at the undergraduate stage itself, to
Okay.
start with, along with your graduation, this is as serious, or in fact more serious profession than let's say a CA or a CWA or a CS. I would say okay, equally serious. They are unique, but this is all pervading. It permeates every single function in an organization, and it's no longer the requirement of one single risk department. It is a requirement of every single function. So I would say at the undergraduate stage, and probably at advanced levels, in postgraduate stages as well.
Okay.
Uh,
Okay.
So
yeah.
I
And
agree with what Sundar said, and I would
Yeah.
also like to add that the basic purpose of education is to change a person's thinking, the way they
Yeah.
look at things. So if risk management comes into the picture, let's say at the undergraduate level or even at a college level, it really shapes the individual's thinking into how to look at every situation from a lens of risk management. And this can go on not just for their official life, it can also move on into their personal life. Because as I
Okay.
said in the beginning, that all of life has changed, and people need to learn how to manage change. And definitely learning about risk and risk management will aid them in this process as well.
Okay. Yeah, Ramit, I believe you were trying to say something earlier as well.
yeah, absolutely. So, Ane, I would differ on some part that risk management is not there in the current education that we have. So, for
Yeah.
example, right, Basel is one of the important topics that's been
Mhm.
taught as a part of the banking and insurance course
Yeah.
that we have, or finance and accounts that we have specialization for graduation, right? But
Yeah.
what happens is when we are when this particular concept is explained to us,
Mhm.
probably students would not understand what's the practical application of it. And Basel is one of very good risk management framework that I studied in the level 2, and I understood the importance of it, how banking works, and it was really interesting to understand how risk is, how these regulations are made from
Yeah.
a risk management concept or a risk management uh, process, taking ISO framework or taking COSO framework into play. So these
Yeah.
concepts are already there. What I would suggest to everyone who has joined, when you are going through the regulations, read through it properly and then try to see what framework has been adopted. And if possible, take up IRM courses, because these certifications really help you in terms of understanding the practical aspect of it. Because after every concept, they will explain, okay, how this is how the regulators uh, have come together, and they're building their regulations and stuff like that. So
Yeah.
yes, that's my take on
Okay.
that question.
Okay. Great. Okay. Thank you to all three of you. Now going on to, I guess, the second part of our event today. We're looking at, I'd say, a crystal ball aspect of it, which would be each of you all individually maybe predicting or giving us a look at what you believe would be the upcoming risks and would be the main areas to look at in risk management for the next decade, of course. Great. Also, I would encourage the audience to please, you can post questions on the chat box, and we'll try and address as many as possible. So whenever anything turns up, please just type a message in, and it's all being noted and recorded down. So we'll address them as and when we can. Yeah. Great. So to start off the next aspect of today's event, I'd like to pass it back to Vignesh.
Uh, Thank you. Are you able to see the presentation?
Yeah, it's visible. Yeah.
Okay. Okay. So, I mean, let's get to the core topic for which we all are here: crystal ball gazing and preparing for the next decade. Now, as we know, a journey of 1,000 steps begins where you're standing now. So, where is the world standing now? Most organizations are, recovering from the COVID-19 pandemic, right? And we are into what the situation we are calling it as the new normal. So, what we would like to see is, what is the change or impact of this new normal onto the field of risk management, and going forward in the coming decade and for the years after that as well, what are the things that would be of importance? Now, what we have seen is that, organizations and individuals who are the most resilient have been better able to manage the impact of this pandemic than those who weren't able to. For those who are unaware, the word resilience, it basically means your capacity to recover quickly from difficulties. A recent example of resilience, that comes to mind is the Indian cricket team's victory over Australia in the test match. So resilience is going to be key going forward. Organizations need to be resilient in order to survive. They need to design and implement business strategies that are resilient and not just focus on profits. We see a lot of complex supply chains nowadays, especially in the automobile sector, the food and beverage sector, the pharmaceutical sectors. So an example would be that they should look at de-risking these supply chains and build in resilience within them so that they do not get impacted as severely by any future event or pandemic that may happen. Now, the next question for you would be, how can one develop resilience? Well, one way I would suggest is through insurance, being that I'm from the insurance industry. And what we have seen, in the insurance industry is that due to the pandemic, awareness and penetration of insurance is increasing. We are seeing a lot of demand for health insurance policies, for life insurance policies. People want to cover themselves. On a organization perspective, we are looking at a lot of demand for non-damage business interruption, which is also known as NDBI. And we are also looking at organizations asking for a lot of covers for pandemic perils. An example would be, Wimbledon. Wimbledon had pandemic as one of their covers, under their insurance policies, and they were not impacted as badly as, let's say, the Olympics has been. We are also seeing a lot of demand for liability insurance in the form of directors and officers insurance. This can be for stakeholders who may feel that the organization and their officers have not been prepared adequately for any sort of pandemic or event. We are also looking at the government stepping in with government-backed pandemic insurances along the similar lines of the terrorism insurance that is there in India and other places as well. Now, another area that we are looking at is the growing reliance on technology. Now, as we all know that, most of us have been asked to work from home. So there is a lot of demand and dependence on technology and the resultant data. Now, all of you would have heard, data is the new oil. So it becomes very important how secure this data is. So data security is going to be key going forward. We also have GDPR in the EU, and we have the Personal Data Protection Act that is going to come into play in India. So data security is going to be key. Another area that will be key is cyber security. And we are also seeing a lot of increase in demand for cyber insurances, both personal as well as for businesses, due to increased cyber attacks during the lockdown and due to the pandemic. So there is going to be a lot of demand for cyber insurance and for data security. The next point is, which will be key, is, as was already mentioned in the poll also, we saw that, everyone is going to be a risk manager. The idea is that risk is not going to be just the purview of the risk management function or of the chief risk officer. Everyone will have to play a role in becoming a risk manager, and the risk management team has to ensure that there is an enterprise-wide culture of trust and integrity that is being built in, so that all the people within the organization, starting from the C-suite up to the ground level, play their role in the risk management. Now, talking about people, right? So I'd like to touch upon a few points that will be important for our young participants in this webinar who are going to be our future risk managers. I genuinely feel that this is a golden age for risk management. This is, for me, it's like the eye of the perfect storm when it comes to risk management. Now you would wonder why I say that. Well, this year has certainly highlighted the importance of risk management. Those organizations that were not well prepared, they have suffered, whereas those organizations that have been well prepared and have good risk management, I gave an example of Wimbledon earlier on. So they have not been impacted as badly as those that did not have good risk management. So what this will result in is that there is going to be an increased demand for qualified risk managers. Now, these risk managers of the future, in my opinion, will not be called just chief risk officers. In my opinion, they should be called chief opportunity and risk officers, because they will not just help the organizations in managing the risks, they will also help the organizations identify opportunities for growth. Now, to aid these future risk managers, professional qualification and continuous professional development will be key. And this is where organizations like the Institute of Risk Management, with their world-class certifications, will play their role. And lastly, because we are entering into this age of data and digital technologies, risk managers would definitely need to have some basic knowledge of data analytics and artificial intelligence, because in the coming decade and also going forward, everything is going to depend on data, and most of our functions are going to be driven by data analytics and artificial intelligence. Now, if I were to just summarize or conclude, the three main points would be that the pandemic, as we are all aware, has changed how the world looks at risks, and this change is here to stay, whether we like it or not. So we need to ensure that we adapt to this change and adapt to the new risks that this change is going to pose. Now, organizations need to be focusing on resilience and cyber risks on an enterprise-wide basis. It's not going to be just that I will only focus on resilience and cyber risks on one particular vertical or one particular part of my organization. This needs to be done on an enterprise-wide basis through enterprise risk management. And thirdly, risk managers need to be the catalyst that brings the business units together to develop this resiliency. As I mentioned earlier, that everyone is going to be a risk manager. So the risk manager's role is going to ensure that all of these people come together and the risk gets managed to the best possible way. So these were my inputs on the risks that are going to be in the next decade, how risk management is going to go in the next decade, and what risk managers and risk professionals need to focus on. So thank you, and I hope that all of you stay safe. Back to you, Anand.
Thanks so much, Vignesh. Thank you so much, Vignesh. That was great. Well, we are receiving a couple of questions that I'll maybe ask you now. One of them is, I believe you highlighted the Chief Opportunity and Risk Officer role, CORO role, rather. So could you elaborate on how that role, what role would that be in an organization comparatively to a Chief Risk Officer? As in, where does the opportunity part in that come in, and what would they look at in an organization?
So that's a very good question, and so this concept of Chief Opportunity and Risk Officer was something that I thought of some time back, and the thought process behind this was risk is not just bad, right? As we also saw in the poll that risk is both positive as well as negative. So I thought mostly people focus only on the negative aspects of risks, try to focus only on the risks, but if you also look at the positives, right? What are the opportunities that can come across by identification of the risk, right? So let's say you have the pandemic as an example right now. So most people would look at it as a negative risk that, oh, my business has shut down. I'm not able to, service my customers. But let's look at somebody like, who depends, whose business model is completely on the cloud, completely digital based, So you
Yeah.
have an example of these education platforms who are doing all their courses online. So their demand has completely gone up. So that is an example of an opportunity. So when you have risks, you need to look at both the opportunity that is there as well as what
Yeah.
are the downsides or the risks that may be there. So the risk managers, the chief opportunity and risk officer will be able to identify both the opportunities as well as the downsides in any particular risks that he or she will identify. So that is where the role of the opportunity comes into play when
Okay.
I talk about the chief opportunity and risk officer.
So you're looking at a combination of roles and aspects, right?
Yeah, in a singular role, just look at risks in a different way. Don't just look at them
Okay.
from a negative aspect.
Yeah. Okay. Okay, great. So maybe we'll address a couple more questions at the end of the event. I'd like to pass it on to Ramit now for his part.
Thanks, Anik. I would like to just continue or piggyback what Vignesh spoke about. I would specifically talk about fintech, which is financial technology, with where I see it's a growing area, but with that there are a lot of risk uh, that I see. And second one is ESG, which is environmental, social, and governance, which is one of the hot topics at this point of time in the market. People are talking about it. One of the examples would be climate change is one of the major risks that we see, and it's a part of the report that we have from the World Economic Forum as well. So first, I'll talk about fintech. Like all of us have seen how financial technology has the innovative technology that has been there in the financial services that has completely changed the market. Like today, uh, I can borrow money from any institute on a click of a button. Although it has made my life easy, but there are a lot of risks involved, risks that I can foresee with that. One is the cyber risk, where I probably get on. Put it, I put in my details, my personal identification details, and probably somebody can just pull out money from my bank account. That is one of the risks that I can see. Um, but there is also a positive side to it. It gives me rolling credit as a customer. So there's both side to it, right? But it's all about the perspective or the view that you have to a particular situation. So where I foresee things going, or in terms of the new areas or the new job roles that I can see, one is into the cyber space, where I see a lot of new certifications that are already there in the market, and people tend to get into it, and this is gonna grow. This area is gonna grow definitely, because what happens is, as soon as a cyber risk or a cyber attack happens, at that point of time the losses, you start incurring losses, right? And by the time you are able to find a solution, you're gone, right? So it's important from a risk management perspective that you start planning well in advance. So that's where I see that these things will increase. Not only that, but these days the job roles have changed. You no longer can say that I don't know computers, or I'm just gonna specialize into a specific function. So it has to be a techno-functional kind of a role. And specifically, if you want to be a risk manager, you cannot say that I don't understand technology. You have to understand technology to certain aspect, certain standards. You have to understand it. You have to understand the functional side of it, and then apply it together in order to find a solution. Second thing I foresee risk is ESG, which is one of the major things that's happening. So today, if I have to, for example, so today what happens is when banks or any NBFC, they have to lend money, they're not only looking at the profitability, or they're not only looking at the directors, they're not looking at the reputation of the company, they are also looking at how the funds going to be utilized. So they look at it, if the funds are going to be utilized for a project where it is polluting the market or it's polluting the world, then they might increase their interest rates, or they might charge premium on it, because they foresee that the project might be shut down because of the government regulations, and they might not recover their money. So the banks might think from that perspective. Second is social, where they also look at it from a perspective: what are the customers talking about, or what are the different stakeholders talking about a specific borrower. So they might, that is where artificial intelligence or data science comes into play, where I can just go to Twitter, pull out all the comments that are there for a specific company, and see whether they are negative or they are positive, right? And that is where the company can assess what is the amount of risk in terms of social environment. And third is governance, that is more related to the regulations, how the companies are, what are the inbuilt structures they have to assess the risk, manage the risk, and are they identifying opportunities out of the risk, or they're just looking, is the company risk averse, everything that they foresee is in the negative uh, light, are they looking at it from that perspective? So these things will be assessed, and it's here to stay. It will not go away, because climate change is one of the things that people are talking about. We're seeing electric cars coming into the markets, and that technology is growing at a faster pace, right? So recently there has been news that Tesla is going to enter the Indian market. So automobile market has so much of risk, right? Because the Tesla has one of the technologies which can disrupt the entire market, right? So now when the banking system wants to lend money to the automobile sector, they will also factor in that, and the credit might get expensive. And I have worked with the credit rating companies. Earlier, it was only the credit risk that was assessed, that if the company will default or they will not be able to make the repayments. But now they have got into the ESG ratings as well. They're not just giving credit ratings. They are trying to look at it from an enterprise-wide level. So what they're assessing is, they assess the data centers. Where are the data centers? What are the kind of risk management policies they have? Are they following the standards that are supposed to be applied? The COSO framework are applied these days. ISO frameworks are applied. So all I would say is that these are the areas where I see the risk, but these are growing areas, these are budding areas. So it's not completely matured like insurance. Vignesh talked about it. It's a very matured sector to I would say, because it has been in the market for quite a long time. They know, okay, these are the kind of risks, they are assessing it, but it's also evolving. Now today, like Vignesh said, there is cyber insurance that people are asking for, pandemic cover they are asking for. So what the insurance company is going to assess, they are going to get into these specific risk management criteria, where they're going to assess the enterprise at different levels. They will assess whether the company is managing risk in silos at a specific department level, or they actually collaborate within themselves, and they assess the risk at the enterprise level. So what I would say is that, to sum it up, these are two new areas that I foresee is gonna impact the market. There will be new roles that will come up, where something like a uh, data operations risk analyst kind of a thing. And if you take take the past few years, right? Majority of the jobs that are created within the banking and the financial service space is more into the regulatory reporting space, which is nothing but managing risk, right? Because what we do in regulatory reporting is we collect the data, we take all the data. For example, for a banking company, we take the data, we pass it on to the regulators. Regulators will collate it for different banks. They will look at it. What is the risk? Where is the risk? Is there any concentration risk? Is a specific company, if a specific bank is lending money to a specific borrower, do they have a specific exposure to a specific sector? If that's beyond the point, then the regulators definitely step in. So these kind of roles and jobs that will come up, it's not just risk manager's responsibility, it is everyone's responsibility in an organization to identify risk and then look at it whether it's an opportunity or it's a risk for a company. So risk can have both. You can look at it from both the sides, right? So yeah, that's what I would want to say, and I would want to conclude on that aspect. Anay, over to you.
Okay, great. Thanks, Ramit, for that. That was actually quite insightful. We do have a question for you from the audience, actually. So you mentioned initially you were talking about fintech, and you mentioned ESG, right? Risks as well, environmental, social governance, in the beginning.
Yeah.
So we have a question. In your opinion, right, in the, say, BFSI sector, what would you look at as the top 3 ESG risks as of now?
One is definitely climate change. Is something that I foresee as a major risk, where the climate change, the money that has been lended, right? And if there is a regulation around climate change, uh, to for example the auto sector, right?
Yeah.
If tomorrow there is a regulation change and the product that had been created by the auto sector, it's not selling in the market, it might impact. So that's first thing that I see. Second is cyber risk is what I foresee. So maybe they have some they're building some technology and they lose it because of the cyber attack. That's the second thing that I foresee is a risk. And third is I would say the blockchain is a major threat to the BFF.
Okay.
Basically, I'm saying cryptocurrency is one of the example of blockchain. So
Mhm.
if tomorrow people start trading amongst themselves, they don't need a bank. They don't need a financial
True.
service
No,
company,
there's no
right?
middleman required.
Yeah. So these are three things that I foresee as a risk.
Okay. Okay, great. Thanks for that. Great. Now, without further ado, I'd like to pass it on to Mr. Natarajan for his views on this.
Thank you, Anay. So what I'll do is, as my colleagues have given a crystal ball gaze on, what we can look forward to in the next decade in the corporate world, in the industry, in the economy. I'll get a little more specific and restrict this crystal ball gaze to the industry which I have been associated for the last couple of decades, which is insurance. Okay. So and using that as a base, we can, if it applies to insurance, it applies to in some other parts of the corporate world as well, right? We had Ramit talking about the World Economic Forum report. We also have IRM India, IRM, which has come out with a risk prediction in 2021.
Yeah.
I would urge the participants to look them up. They give a very, very good view of what kind of risks one can look forward to in the next few years. And if I've been tracking this every year. So if I were to look at the list this year, last year, the year before last, and so on and so forth, clearly the one which occupies more than 40, anywhere between 40 to 50% is around environment, climate, disease, that kind of stuff. It occupies top space. But I'll come back to the insurance industry. Okay, let me focus on some of the big risks. And anyone who manages this well, and or like Vishesh said, who's resilient enough to manage this well, is going to come out on top in the next few years. We are seeing a very, very big change. Pandemic has brought about a very, very big change. Life insurance especially is, and health insurance especially is, and yeah, cyber insurance, consequential loss insurance, business interruption insurance. All of these are moving from being sold to organizations and people to people coming and asking for them. Right? It's becoming a pull proposition. So capability to price in a relatively new era, in a post-pandemic era, okay, that's a big challenge. These are times which we have not foreseen for the last, we're not seen in the last 100 years. And typically, and Ramit also said that insurance is a mature industry. Yeah, it's almost a 4 century old industry. So we do look at a very, very long term. We do look at 100-year plus view when we do pricing for some of these things, because it's absolutely essential for the existence of the organization. So it's a large challenge. It's a large opportunity as well. For somebody who's able to do it well, great opportunity. Now it also brings in to account. We are seeing in this time in the 2008 financial crisis, one of the significant factors we noticed was India was pretty resilient, right? Pretty resilient. So if India is going to be resilient as an economy in these troubled times, then we can see a lot of inflow of investment coming in. And the budget a week back has given a lot of impetus to that. So a huge amount of investment is expected to flow into the infrastructure sector and so on and so forth, which means a lot of capital is going to come in. And anybody who's able to manage capital well, I'm speaking for insurance, but it is applicable to everybody. Anybody who's able to efficiently manage capital is going to come out on tops. When there is plenty, when there is scarcity, you value it. When there is plenty, you kind of wither it away. So that's a big risk. A lot of capital coming in is a big risk. Market volatility. Okay, markets have been choppy. They've been volatile. When I talk about markets, I'm not only talking about the equity markets, but also the debt markets, the forex market, the metals market. They've all been pretty choppy. Real estate market. All of these contribute to an economy, right? And they all affect us. They all, for me as a life insurer, they affect us. They affect because these are alternate opportunities for investment as well. These are places where potential customers reside in. And all the money which a life insurer or a general insurer collects, they go and invest. So we have to ensure that our investment strategy is, very well structured to be able to manage these volatile markets. Now, we talked about customers being more aware, right? When customers are more aware, you will have customers who get more demanding. Okay, when customers are more demanding, service delivery becomes a huge area of risk as well as opportunity. Operational efficiency and innovation, they will make a huge difference over here. Ramit mentioned the fintechs. There is a flurry of insurtechs which have been born out of the new normal, and they will also struggle to kind of maintain their place. But the best amongst them will help the industry hone the operational efficiencies, and operational risk management becomes a huge area of opportunity over there. Right, anybody who's a good operations risk manager, will be in demand. And historically, what has been seen is when it's about risk management expertise, it's restricted. It's kind of been restricted to financial risk to a large extent. In the BFSI segment, and in my colleague, my co-panelist Vignesh will agree to a large extent to principled risk management in the general insurance space, where you actually give risk advisory to corporates. But it doesn't go beyond that. Do we have somebody who's doing, who's putting finesse to a process and identifying opportunities or risks, like how Vignesh talked about the Coro role. It's a huge area of opportunity. Another big one, which I foresee, is India is likely to adopt IFRS, and that brings in risk of obsolescence and opportunity for accountants and actuaries. Okay, so that's a big area which I foresee. The risk function itself, I think, very rightly put up by all my co-panelists, the risk function itself will undergo significant change. It will become more all-embracing. I don't know if any of you have seen the series, the Godfather series, the movie Godfather. Okay, or read the book by Mario Puzo. It's a cult book and a cult movie. So there's this character which comes in the movie, okay, who's the brains, okay, who's the support, who's the advisor, and that person is called the consigliere. Okay, so my view is that the CRO or whatever name by which they are called in the future will be the consigliere to the board or to the CEO of the organization. And I would want to keep it at that. Anyone has any questions, I'm happy to address. And what I would like to sum up is that IRM offers a fantastic springboard through its 5-level certification, and that will help leaders of tomorrow, future ready and risk ready.
Great.
Thank you.
Thanks for that, Mr. Natarajan. So we do have a couple of questions. I believe this one would be directed towards you, Mr. Natarajan. So one of the things you also mentioned was how the risk function, right, needs to go beyond the boardroom and needs to hit maybe every function, every level in an organization. So in what way, or rather, how can risk be included or integrated at every level in an organization? And is it actually required at every single level, or just slightly at a senior management or a CXO level?
Okay, so risk, risk would need to be there as a thought process or a way of life, okay, in an organization. So it has to be into the culture of the organization. Okay, so then it is not restricted to any level. But okay, change is not easy, right? Change is constant, but change is not easy. You can't snap your fingers and say, okay, risk has to be there everywhere. There. So it's a journey. So what would need to be done is, it has to be a step-by-step process. So if it is today well entrenched into the boardroom, okay, the next level is the leadership. Okay, it has to be well entrenched into the leadership. They need to start taking risk-based decisions. And once it's well entrenched into the leadership, simultaneously, one has to look at doing something bottom up. Okay, it has to find its place into every function. It has to find its place in the annual operating plan of the function. Okay, and then how it is tracked month on month or quarter on quarter in that function. So when there is when you put it in the plan, when you put it in a review, and when you say it needs to get done, and then you go and demonstrate its benefit. See, at the end of the day, we are all very selfish. What's in it for me, is an absolute essential for everybody. So only when somebody starts seeing benefits, will so it will need one cycle. It will need a lot of senior management conviction for it. And the good news is that it is happening today. Okay, today, the boards of today are very serious about it. Okay, they are not willing to take lip service. They are seeking more intrusive efforts, and that will flow down into every organization. And this is not restricted to only corporates, right? You talk about an entrepreneur. Risk is so absolutely essential, for an entrepreneur. And I'm sure, out of the audience we have today, there are a lot of budding or existing entrepreneurs. And, IRM has brought out a wonderful course for entrepreneurs. I would urge them to look at it. It's being done with in collaboration with the Government of India. So, it's they are putting everything at stake. They're putting their whole life earning at stake. Everything, it's coming up there, and all 100% risk is going into that enterprise. So
it's a huge hit and miss for a lot of entrepreneurs.
It will move from the boardroom to the DNA of the organization.
Yeah. Oh, yeah. That's very well put, actually. Great. Okay. So we have a question. I think this would be best addressed, I guess, by Vignesh and Ramit. How can risk be integrated into better allocation of resources and capital of an organization, do you think? Does risk play a major role in, I'd say, to rephrase it, does risk play a major role in resource allocation or capital allocation in an organization?
I would say yes, it does, because each organization has some limited budget, and that money has been allocated to various things. So if we identify that there is a big risk for the organization, so the resources may get diverted to be able to manage those risks. But if the risks is seen as a very low probability, having very low impact on the organization, the resources may not be focused much on that. But if it has a high probability and high impact, for those risks, the resources will get diverted over there. So it depends on what are the risks that have been identified and what the board feels, whether the impact of this risk, whether the organization will be able to handle it, and whether they'll be able to continue with their operations or continue with their business in spite of these risks taking place. So my take would be that it depends on that.
Yeah, I second that thought. I second that thought. I also have an example in the current situation of pandemic, right? So most of us are working from home. So a lot of companies, the offices that they're taken on lease, they have just given it up, right? And I'm not sure, most of us do get our bonuses in the month of January or April. So that's how they're trying to compensate, right? And so this is all coming from a strategic level decision. You can't just give away your office, right? Nobody's gonna just get up in the morning and say, I'm gonna give up the office. This is all a thought. This is all thought through beforehand. And definitely they have plans in place, and it definitely comes from the top, discussed with the risk managers. What is the impact on it, and then the resource allocation is accordingly tweaked. And also, if it's today, if I need funds, right, for a specific department, it does not happen immediately. What happens is you have to go through various processes where the finance department definitely have some controls, and then there are a lot of matrices that are generated and passed on to the risk manager and to the board, and then the board accordingly looks at it, and then they take a decision where they want to allocate their funds.
Yeah. Okay. Okay, great. So, well, I guess we've come to the end of our regional group event today. I'd like to first start off by thanking all the panelists for taking a bit of time out for today and addressing all the attendees and being a part of this IRM event also. And well, all the panelists are part of the IRM India family in one way or another, connected through. Unfortunately, Vishesh couldn't sit through. He had a small emergency, so I extend my thanks to him as well. And well, as Mr. Natarajan said, and even Vignesh pointed out, everyone is a risk manager in today's day and age, or rather, everyone needs to be a risk manager. Yeah, and risk resilience is the need of the hour, rather, in every organization, be it family run, be it a small, medium, or even a large enterprise or an MNC. So I hope today's session was rather more than educational, rather knowledgeable for all the attendees. And thank you everyone for attending. If either of the panelists would like to put in a word or say something, please go ahead.
So thank you, Anay, and thanks to IRM India for organizing this wonderful session. And it was really a pleasure to be a part of this and to share my experience and my points on what I feel that risk management in the next decade is going to be. And I hope the participants gained some sort of insights from all the inputs given by all the panelists, and it helps them in their job. It helps them plan for their future career for all the youngsters out there. And stay safe, everyone, and look forward to seeing you all in other sessions in the future with the IRM. Thank you.
Thank you, Vignesh.
Thanks, Anay, and to IRM India for organizing this, and thanks to my co-panelists. I would say two words, which is a personal credo: be prepared. And the next 10 years are going to be very, very exciting.
Anay, thank you so much. I think it was a lovely session. I got to learn a lot of things from the co-panelists, and really, it's a great opportunity to put across my points. Yeah, thank you so much.
Great. Well, it's been a pleasure. Thank you, the three of you, as well. And thank you, all the attendees. Have a great day. And looking forward to seeing all of you at the next event, be it the regional group or be it any other. And I hope the panelists come back once more to talk on those platforms as well. You can go check out IRM India on any of the social media websites, or you can look at our Instagram page. We post a lot of reports and a lot of knowledge-based reports rather on there. So for the future generation of risk leaders and risk managers, I wish you all the very best. And thank you once again to the panelists and everyone here.
Thank you. Bye-bye.